Nikkei just hit a record high. TSMC sales up 37%. The House just blocked Trump's tariff agenda. It's CPI week. Let me tell you what moved overnight and what you need to do before Friday. Here's the bottom line. Regime is risk on inflation. Both models confirm, stay long. The quant system is 80% tech. The macro strategist model is 60% equities plus 30% gold. Crypto is zero across both models. Friday's CPI is the catalyst. Everything before it is positioning. Now let me show you what happened overnight. U.S. policy. Trump administration planning chip tariff carve-outs for Amazon, Google, and Microsoft tied to TSMC investment commitments. Meanwhile, House Republicans advanced a motion to block a vote on Trump's tariff agenda, potentially delaying it until July. Takeaway: tariff policy is messy. Don't assume clean execution. Japan. Nikkei closed at a record high. Foreign buying could surge fivefold, potentially surpassing Abe-era levels. Finance Minister Katayama said they could use surplus from Japan's $1.4 trillion forex reserves to fund sales tax cuts instead of issuing debt. Takeaway: this is the Takaichi trade playing out in real time. Semiconductors. TSMC January sales grew 37% year-over-year, the fastest clip in months. That sustained AI spending. Credo Technology jumped 16% after crushing guidance. Takeaway: AI spending is sustained. Tech strength confirmed. Europe. Macron called for an EU economic revolution, said Trump is pushing for dismemberment of the bloc. European VC hit €66 billion in 2025, a post-pandemic high. AI and defense are the focus. The overnight news supports the regime. Tech is printing. Japan is rallying. Before we look at positioning, 60 seconds on why the economy feels terrible for most people, even when asset prices are near all-time highs. Here's a stat. 99% of all job growth is coming from government and government-adjacent sectors. Only 1% is coming from the true private sector economy. Pre-COVID, 31% of job growth was government-adjacent. Last 2 years of Biden, 72%. Now, 99%. This is the Cantillon effect. Newly created money doesn't enter the economy evenly. It flows first to those closest to the spigot. Government contractors, large banks, asset owners. By the time it reaches everyone else, asset prices have already inflated. And treasury supply is absorbing 40% of global savings, up from 22% historically. That's money that used to go to private sector lending. It's gone. The K-shaped economy keeps widening. That's the 60-second class. Now let's look at positioning. Both models agree, risk on inflation. The quant system shows neutral growth, bullish inflation, risk on regime. The macro strategist model is 60% equities, 30% gold, 10% cash. What does risk on inflation mean? The economy is holding. Inflation is sticky. Late cycle, but the music is still playing. Stay long. Stay disciplined. Now here's the flag. The quant system has 80% TQQQ, 0 gold. The macro strategist model has 60% equities, 30% gold. That 30% gold is the tell. The quant sees momentum and rides it. The macro strategist sees inflation risk and hedges it. Both are bullish, but one is hedged. Write this down. When models diverge on gold, respect the hedge. Friday. CPI drops at 8:30 a.m. Headline expected, 2.5% year-over-year, down from 2.7%. Core expected, 2.5%, down from 2.6%. Here's the rule. CPI at or below 2.5%. Regime confirmed. Stay long. CPI above 2.7%. Regime threatened. Fed stays hawkish. Yield spike. Everything between now and Friday is noise. Friday is the signal. 5 rules for this week. Screenshot these. 1. Stay long equities. Both models confirm. 2. Respect the gold hedge. The macro strategist sees inflation risk. 3. Don't front-run CPI. Friday is the decision point. 4. TSMC up 37% confirms the AI spending thesis. Tech strength validated. 5. The quant system isn't a 16% drawdown. Trust the system or reduce size. Don't panic sell. That's the brief for February 10th. Overnight news first. Then regime. Then positioning. This is how we read markets at the Daily Profiler. thedailyprofiler.com.
Hi, good morning. Hopefully everybody's good. We will be doing our war game for February 10th, and it is Tuesday, so let's get after it, right? Starting on the daily chart, we already talked about NFP Friday, previous month 50%. From a candle science approach, right, we're going to use Friday and Monday, right, which Friday was bullish, Monday closed above the high, so let's put that in our candle signs. Bull closed above the high, right, and we can see, let it update. Uh-oh, we've got a glitch. Let me log back in. All right, back to this. So Friday was bullish. We closed yesterday above the high. And so now we have 883 times. We know that previous day high has an 81%. So let's write that out. Previous day low has a 21%. Let's write that out. All right, and let's adjust these because these are super annoying and way too big. All right, so now we have our stats. We know what that looks like. Now let's see if we get a reversal, how it shifts the probabilities using previous day mid and previous day opening price. We lose the opening. How does that affect the stats? Well, we know that that previous day high jumps down to 65. So let's go on and put that in. And then previous day low jumps to 64. So that's pretty definitely paying attention to that. And then now let's find our MFE, our percentile reversal zone, right? So off of previous day high, right? We know our 30th percentile is 0.25. So off of previous day high, we can go 0.25 up. It's right there. Let's get a green box. And then we know that's going to the 50th percent reversal zone, which is 0.43. So let's draw it up. And then let's go and put our 70th percentile zone, which is at 0.7572. And now we know where our 50th, our 30th, and our 70th percent reversal zone based off of yesterday's and Friday's actions are going to be. All right, so now we're going to move to the intraday real quick. To the weekly, I mean. So we see that we're still above Sunday's range, right? We know that there is still, on the weekly, there's still a high likelihood to hit this 0.51. Actually, there's an 86% probability for the weekly that we get up there. Right, so we know we still have targets to the upside, all targets to the downside from the weekly, right, have already been met. So now it's about locking in today's, the weekly high or low, right? Put the wrong one on, so let me fix this. So can we consider the low of the week that happened on Monday at 10 o'clock, right, a good statistical low of the week? And we can see that, yes, like that can act as a statistical low of the week. This is all the data for MAE at that time. So majority of the time, actually, like you do put a low or a high of the week in before then, right? So I can start seeing it. And how I'm going to do this is I'm going to look at, right, how Tuesday's range from 9:30 to 10:30 plays out, and can we get above it to hit these higher probable weekly targets up here, right? So now let's go over here, and of course, New York 1 is giving us some shenanigans, right? So we can see right out the gate that we have contradicting markets. So Asia sold, London bought, right? So we're expecting a new high day, low day after RTH, right? So let's go see how that is factored in with the daily profiler, right? All right, we said Asia was short, true, broken. London was long, true, broken. It's short, true, broken, and long, true, broken. So we don't have any overnight OU levels that we can base our decision making off of. Now we're going to go to wargaming because I want to see the high day, low day sequence for each one of these, right? I can see for a long true, like there's a high probable. Let's see when our low day and high day currently is, right? It is low day at 22:15, high day at 7:30. Cool, right? You see that there's not really much data at 22:15 for a new low day. You can see all the data for a new high day is after 9:45 for a long true scenario. For a long false, we can see new high day, right? Between 8:30 and a new low day, both being in the RTH. For short true, you can see that there's a supported high day where the current 7:30 high day is, and then you expect a new low day in the RTH. And then for short false, you expect high day, low day after RTH, right? So we know that the trues, right, in the day's sequence are put in either the high day or the lower day in during the ETH, and the opposite side comes in the RTH. And for the falsies, they both point to new high day, low day in the RTH, right? So we're going to be definitely aware of that, right? We understand, like right now, there's only those are the four possible scenarios that we can do out of this 7:30 to 8:30 range, right? So now, right, we need to see what other levels stand out to us, right? So coming over to our levels, we can see that we're swiping the P12 mid. So that's pointing us to anticipate a possible range one day, right? We can see that we've hit all the midnight, the P12 mid, the settlement, the New York OU, the Globex, all hit those beforehand. So the only thing we have to play with is the previous day high and previous day mid and the P12 high, which we've already looked above and failed that one, and the previous day mid and the P12 low, right? So let me reset this up, 06 to 17, all right? So now, right, this is going to be one of those days where it's probably not going to make us move out of the 7:30 to 8:30 box until 9:30 volatility steps in, right? So let's go back to the daily profiler and see, just with all four scenarios playing out, right? We can see that the previous day high has a high probability of hit, and that's P12 high over the P12 low, right? We can see though the sequence of the P12 high is it likes to hit the P12 high before it likes to hit the P12 low, and we've done that at 7:30. Right? We've already hit the P12 mid, and now the only one in question is the P12 low, which has a 77% probability and gets hit between 9:30 and 10:15. If we can't hit that P12 low between 9:30 and 10:15, we know that this 77% probability is dropping off, right? All right, so now let's look at it from the lens of settlement fill, right? Because settlement looks like we might be opening right on it. Yeah, we're going to probably open right around it. So that's fun. So we don't have that edge that we can play with. All right, so let's go to previous day mid and previous day high and low. Well, we can see the previous day high has a higher probability of getting hit versus the low, but not by much. And this previous day mid has a 65% probability of getting hit. With the cluster of data, majority of the data hits it between 18 and 18:15, but majority of the data sits there between the morning session, right? Between 9:30 and 11, right? So with that being said, right, I'm going to start my wargaming analysis with the short side of the house because of that, right? I obviously know that this previous day high has a higher probability from candle science and a completely independent variable of daily profile. But let's see what it would look like if we break out of this 7:30 to 8:30 downwards first, right? And how that impacts everything. So we go short, right out the gate. We can see that there's a 51% true versus a 48% false, which is a very unique situation because usually it's false over true. Today, if we go short, it's true over false, right? So let's see if we have that same effect. And we can see if we break to the long side, there's an 88% probability to be false and 11% to go true, meaning if we go up, we're damn sure expecting to go down. But if we go short, it's a 50-50 split. So we're going to have to utilize the four-step reversal to confirm if that false really wants to happen. And if we go short first, it might be better to wait for the 10 o'clock hour or just to take cash flow trades off the 9:30, right? So I already know that if we break out to the downside of that 7:30 to 8:30 range, my job is to take cash flow shorts if 9:30 trade gives me a short signal. Right? If we go long, my job is to take shorts and take cash flow longs if the 9:30 gives me them, but then to start looking for 9:45 reversals, 10 o'clock reverse sweepers, like whatever I need to do to get in shorts because it's pointing to that way. Right. So almost both the scenarios are saying, hey, right, pay attention to the shorts in the New York one. And then like we can care about the longs in the afternoon once New York 2 gives us, so we'll definitely be paying attention to that. Right. So this is going to be one of those days that I submit as a fraud and I say, I don't know. Right. Like I'm going to let live price kind of dictate like how I'm going to do this. Right. It looks like we want that previous day high right now. But as you just saw, right, there's a high probability if we do break out to the long side to go false, meaning we're going to come up here and then we're going to net, right, somewhere up top and then come back down. Right? So with that being said, let's look at the high day for that, right? So long false, right? We can see for a long false, there's a 9:30 to 9:45 high day, right? That's the highest probability between 0.3 and we'll say 0.6. So let's put that in. We'll say long false 0.3 to 0.6. Highest probable time 9:30. Let's say to 10:30. Right? And then for the low of the day, we're anticipating an intra-day low day, or it's going to be like, depending on how fast it moves, we can have a low day between 11 and 11:30 or power hour. So we're just going to say our low day is from 11 to 1500 at 0.3 to 0.7, right off of Globex open. So we're going to say negative 0.3 to negative 0.7 from 1100 to 1600 because there's no real edge in the low of the day right now from a time perspective. And I messed that up somehow. Let me go back. Oh, I put 0.6. Right? So do we have the distro? We know that the 10-day median range is 745. We're looking to see if volatility wants to start contracting today, right? Meaning the range getting smaller and not put 745 in, right? So we are going to be aware of that. And we're starting to get the range one signatures, right? To start expecting a doji style day or a smaller body style day, right? Between contradicting overnight markets and swiping the mid like we are, right? We definitely are expecting that, right? All right, so this is, if we do this scenario, like I said, if we're down here, I'll target longs going up, but then I'm going to be ultimately looking for a reversal in this high day zone to bring in at least the previous day mid, right? The day just feels like a one trade around the 9:30 cash flow style day, right? Not seeing it all that great. So with that being said, like I know I have targets to the upside, right? From a weekly perspective, I know previous day high is to the upside. So if we start breaking the upside, though, the 11:30, 8:30 to 11:30 has a higher probability of moving back down, and then maybe, New York 2 takes us back up, right? But yeah, I'm gonna like play this one by ear, right? To see like If 930 gives me longs, I'm going to take cash flow to see if this is going to be a long, true style day. But yeah, I'm definitely going to be cautious today because I'm definitely not seeing the market correct. I am very, very long biased. But like the fact that it looks like we're going to do the long false, this might be one of those days where I take cash flow in the morning and then I reassess with pocket. And, like in the afternoon, we'll see if they want to close this thing higher for the end of the day and we trend it into settlement, right? But yeah, I'm in a data risk situation, so I need to wait for something more obvious to pop up. All right, that's what I got today. I know it wasn't very helpful like it usually is, but hey, like our job is to know when to reset our edge, when to admit that we don't know what's going on, and to know when we do know what's going on and how to trade each scenario because everybody's going to have those situations happen to them. And I'm just trying to lead by example. So with that being said, later.